Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good Thursday morning. Welcome to Financial Issues. I'm your host, Shana, and I'm happy to be with you here today. I'm happy to see you all here with us today, tuning in to see how you can defund darkness with a biblically responsible investment strategy to screen out those companies that are using shareholder dollars to fund an ungodly agenda. So for just $132 a year, you can partner with our ministry and get access to sort of a blueprint, asset allocation models on how you can build a biblically responsible portfolio with actual suggestions for what to buy on our buy list. So if you're a partner, make sure that you're logging in once a week to read the commentary. We have posted some commentary this week, kind of giving you an update on where we are. We know the buy list looks sparse right now. It's not because we're on vacation or we're not paying attention to it. It is purposefully done. So go read the commentary to find out a little bit about what we're thinking. Let's get to the stewardship verse of the day today. It comes from Proverbs 17:16. Why should a fool have money in his hand to buy wisdom when he has no sense? Proverbs 17:16 discusses the futility of giving wisdom to someone who lacks the heart or desire to actually use it. The verse suggests that wealth or resources are useless in the hands of a fool because they do not seek wisdom or have understanding to appreciate its value. Essentially, it emphasizes that wisdom cannot be bought or forced upon someone who is not ready or willing to receive it. So one possible answer to this rhetorical question that the scripture poses is, well, of course, fools shouldn't have any money because if it were even possible to buy wisdom, it wouldn't be on their shopping list and they wouldn't recognize it if they even saw it for sale. Seth,
It's good stuff, Shana. Yeah, it's exactly right. It's a good analogy. You know, the verse, I think, also is saying that wisdom is of infinitely greater value than wealth. So we can see the value of wealth in front of us. In our country, we see the value of the dollar decreasing, but wisdom's value never decreases. It only increases, and it's of far greater value than wealth. Interesting, Shana, even a fool can be wealthy, but the wise man, whether financially wealthy or not, has found what is truly valuable. And so I hope that our listeners would resolve to seek wisdom over wealth in all things, knowing that it pleases God.
Amen.
That's good stuff. Well, Shana, a question for us kind of related to this is how we use our brokerage accounts well. Could you give us some insight on just how to get the most out of your brokerage account?
Yep. So let's start with connecting this with the scripture of the day.
Sure.
So what good is a brokerage account in the hands of an inept investor?
Well said.
Fools will see money as an end to happiness and will try all sorts of get-rich-quick schemes. Fools have no wisdom, they have no patience, and they have no understanding in how to invest. So until we fear and revere the Lord and his ways, we have no true wisdom at all. And we have no understanding about how to do anything that will bring about good results and blessings. So that's where we start.
Yeah, good stuff. And now getting to the brokerage platform, is there one that might be best, or does it not really matter? Just kind of pick one and go with it.
Yeah, so I don't really have a recommendation for a platform. I'm in private practice and I use the Fidelity platform. I don't know if it's the same as the discount brokerage platform, but my recommendation is just to find one that you like and that you understand and that is easy to use. So there's lots of different ones. This is not an all-inclusive or comprehensive list, but I know Fidelity has a discount brokerage, Vanguard has a discount brokerage, Schwab does. There's Interactive Brokers. There's even, and I don't know much about it at all, but the Robinhood platform. So there's lots of ways that you can that you can purchase the things that you need to purchase to build your biblically responsible portfolio. Just make sure that the one that you're going to use will allow you to buy the things that you want to buy. Make sure that it's not just a mutual fund account where you can only buy the mutual funds of that company, but one where you can buy individual stocks, you can buy brokerage CDs, you can buy treasuries, preferred stocks, and ETFs. So, and mutual funds as well, but not just one company's mutual fund, any mutual fund that you want.
Good stuff, Shana. Last question with this. How often is it wise to check our brokerage accounts? Do we do it every time we plan to make a trade, more or less? What do you think?
Yeah, I mean, I think it's counterproductive. I certainly wouldn't recommend looking every day because you may be tempted to, put your hands on your portfolio, make changes that might be counterproductive, make short-term moves that could be counterproductive. So, I think you can use your brokerage account to kind of get a snapshot of where you are. You can also access your monthly statements on there. So that's one thing that I would do, at least monthly. Most people get e-statements these days, so you actually have to log in to view your statements. So, once a month, just making sure that there's no unusual activity in your brokerage account, things that you didn't initiate on your own. But I certainly wouldn't, try to micromanage it on a daily basis. We're not, this strategy is not a trading strategy.
Good stuff there, Shana. Speaking of wisdom, you'd also mentioned Robinhood as well. We have a partner here who was handling investments on Robinhood. This is Ed. He's a bit of a newer partner. He's 63 and said, my wife passed away, was the one handling the investments we had on Robinhood. I'm a partner. I don't understand how to move the investments to match the pie chart as it should be currently. I also need to use the profit gain to reinvest in more stocks. I'm brand new to all of this. Really need some one-on-one help. Shana, what help can you give for Ed here?
Yeah, Ed. So I would say, that I think it's a great thing what your wife has done, becoming a partner with financial issues, committing to being biblically responsible. That certainly is the opposite of what we saw in the scripture this morning, indicating that, fools have no purpose for being able to have resources, but it sounds like you and your wife have been good stewards, desiring to honor the Lord, and that is something to be grateful for, and very, very proud of you guys for doing that. So, don't get in a big hurry to do things that you don't quite understand how to do yet. Spend some time on the website. There's lots of instructional videos that show, how to work our strategy and how to rebalance and how to deploy money that needs to be deployed. But specifically, you're using two different tools here. You're using our website, which has the portfolio tracker on it. So that's what I believe that you're referring to when you say the pie charts. So the thing that you need to know is that the portfolio tracker has a manual input. So the first thing that you're going to want to do is, if you can look on if you have dual screens and you can look at them side by side. If not, maybe you just want to do a printout of your like an alphabetical holdings of the alphabetical holdings in your portfolio and compare that to what is on the tracker, and just make sure that it lines up. If you have 100 shares of XYZ company in your brokerage account, make sure that that's what it says on your portfolio tracker. So make sure that those two values are lined up. And then whenever you go to look at the output screen on the portfolio tracker, you're going to see in, I believe it's yellow where you should be, and in like a dark blue color where you actually are. So let your eyes be drawn to the sectors that you're overweighted in, where your holdings represent a higher percentage than the target. And then you're going to look into those sectors and you're going to see, well, there's some things that you probably need to sell. And selling things is part of rebalancing. So, you'll go to back to your portfolio tracker. You'll see which things are in that sector, and then you'll have to make some decisions about what to sell. And if you're underweighted in some things, then that means that you need to buy positions or add to maybe some of the positions that you already have in those sectors. So your financial issues website, the tracker there, is to help lead you and guide you into where you need to sell things and where you need to buy things, but the actual transactions have to happen in the brokerage account.
Good stuff. Thank you, Shana. Yeah. And Ed, our condolences with you as well, of course, for your wife passing away. It's really tough.
Absolutely. Yeah. Dan always used to say, don't do anything for a year.
Yeah.
Take some time to grieve your losses and, do those things and take care of the things that have to be taken care of immediately. But, give yourself some time to grieve and don't necessarily get caught up in thinking that you have to do this right away. Well, folks, if you are listening on an outlet that only carries the short version, well, keep listening because we've even got more here in the short version. Almost took us out for the day, but we're going to be back in just a few minutes, so don't go anywhere.
When I took the test, I knew that I had other options. I was really scared. I know that it's really easy to get an abortion in New York. I've been down the other road before, and it really was a negative experience for me. And it felt like I did it because it made things easier for my partner at the time. And this time I thought, I think I want a different story. I'm just really scared. And she said, we'll take it a page at a time. It felt scary, but it felt like a good thing. I'm gonna have to, if I have this baby, I'm gonna have to do it alone, and that's gonna be really challenging. But I wanted to do it. But I knew that I needed help and to get around people that would help me, not people who would say, this is a problem that we can make go away. More like, this is awesome and we can help you make it more awesome.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Welcome back to Financial Issues. We're so glad that you joined us today. Well, we are almost through earnings season. Earnings season happens 4 times a year. It happens once a quarter when publicly traded companies report their results to the public. So they'll report how they did in the most previous quarter in regards to their sales, if sales were up or down, how well they were able to control their expenses and what their earnings were. And then they'll also get some forward guidance. So today we get retail sales out and we get numbers from Walmart and some of the retailers. So, I'll be able to dig into that today and bring you some more analysis on that tomorrow. But up to this point, we've had the retailers are usually some of the last ones to report in earnings season. And right now we've had over 90% of the companies in the S&P have already reported their earnings for the second quarter. So according to FactSet does all of the kind of number crunching and puts all this together. But of these companies, 78% have reported actual earnings above the average earnings estimate, which is above the 5-year average of 77% and above the 10-year average of 74%. So far, looks like earnings are coming in pretty decent. In aggregate, earnings have exceeded estimates by 3.5%, though, which is below the 5 and 10-year average of 8.6 and 6.8. So at 3.5. So earnings are still beating estimates, but barely. This is pretty typical. This is what we expect mid-year anyway. Companies tend to manage expectations by under-promising and hopefully over-delivering to this point, but they're not over-delivering to the point that we would have hoped that they would be over-delivering. So FactSet went on to report that the top-line sales numbers were less impressive. They said in terms of revenues, which is top line, 59% of the S&P companies have reported actual revenues above estimates, which is below the 5-year average of 69% and below the 10-year average of 64%. In aggregate, companies are reporting revenues that are 0.5% above the estimates, which is below the 5-year average. So this will mark the lowest revenue surprise percentage reported by the index since the fourth quarter of 2029. So the bottom line here is that if sales and revenue is suffering and companies don't respond by cutting costs, which usually translates into layoffs, then full year earnings will suffer. And that's what we're seeing in some of the forward guidance here. So we'll have to combine the inflation data with the retail sales data, the unemployment data that comes out weekly, and the big reports that come out monthly. And I think that we're going to see that the economy is starting to soften a good bit. So in addition to guidance for the next quarter, these companies are saying that guidance is weaker. Revisions could get even worse after we hear from the retailers today and in the next couple of days. So we'll keep you posted. Of course, we do for our partners. We try to post commentary at least once a week. It's usually at the beginning of the week, just to kind of give you a glimpse into what we're seeing happening and help you connect that to what's happening with our strategy as well. So make sure if you're a partner that you log in and check that out. That's really the only way to get it. We don't send that out on emails or anything else. You have to log in and go to the buy list, the partner buy list and commentary page. Let's see if we can get some questions answered. What do you think?
Let's do it, Shana. That's good. Diane, up for 66 years old, is Diane. She says, I've been sick for the past few years. It's prevented me from updating my portfolio, mine and my husband's. Now I'm working on updating our 2 portfolios. According to the partners buy and sell page, I should sell 11% of my stocks in my portfolio and 6% in my husband's. He is 74 years old. Should I do this all at once and reinvest this money in stocks on the buy list as they become available? What do you think?
Yep. Even though you've been out of the saddle for a few years, Diane, we're glad to hear that you're feeling better. But that is, you're exactly right. That's what you should do. Act on those sell orders. And, that gives me some great feedback, too, to let me know that I don't know what your cash percentage is before you take these actions. But, we are being intentional right now about we're not selling out of everything. Don't get me wrong. Don't hear me if you're not a partner and, think that you have to go sell everything in your portfolio. It's a strategic move for the partners only. The partners will understand how this is being done. So, yes, the buy list is sort of sparse right now, but, things will be added in due time.
Yeah, good stuff. Next one up, Shana, is Dale. More of a comment here. He's saying a message CTR on FISM would be beneficial to me, as you and I both realize that we're saturated by emails from everyone, every organization. Going through the emails, a little bit tedious to say the least. In fact, I almost passed the last email up that he had received. Any thoughts on Dale's comment there, Shana?
Yeah, Dale, we are looking into that. I don't know if it'll be something that we can roll out in the next website update, but I think it would be probably beneficial for you to have a message center on your there when you log in so that you can see if you have anything that's not been read. But as I mentioned earlier, it's a good practice to log in to the Financial Issues website if you're a partner once a week. Go read the commentary. That'll help keep you up to date with what we see happening and how we're implementing that information, integrating that information into the strategy. And then you could always just go back and periodically check the alert tab to see if you've missed anything. So if you go to the alert tab when you're logged in as a partner, you're going to be able to see all of the recent alerts, starting with the very most recent one, so you can kind of keep up with it that way. You know, we're also looking into possibly coming up with a way to alert by text message as well. So don't know for sure if that's going to work out for us or not, if that's going to be something that we can budget in. But, you know, I think I feel you. You know, I have the same issue with my email accounts. I have multiple email accounts, and so there's things that definitely get buried in there.
Yep, that's good, Shana. Daniel up next, 50 years old. He said in researching the new preferred stock, FP50, to hit the buy list, he came across a note from a previous offering of theirs. He includes that there. He's wondering, is this any cause for concern that the trust name has changed or that they suspended dividends during the recession, or is that to be expected? What do you think, Shana?
So two things. I did look at the note that you sent over, Daniel, and it doesn't appear that it's the same QSIP number. So I'm not familiar with this website that you use, but it doesn't look like the QSIP number that's referenced there is the same one that's on our buy list. But I did see that this particular stock has, you know, had a history where it suspended the dividend for a little bit of time during the financial crisis of 2009 and 10 that they did that. So, you know, that is definitely something that could happen. That is a risk with preferred stocks, that they could suspend dividends. This particular company is a real estate investment trust, so the majority of their income comes from rents. And during the financial crisis, if they were not getting rents paid, then they didn't have, income to pass through and to pay out to their shareholders. So it is theoretically something that could happen again if conditions get worse, and that is a risk that you should be aware of when you invest in preferred stocks.
Yeah, good to know. Kevin up next here. Kevin is 60 years old. He's saying, recently rolled over my wife's 401k to a traditional IRA. We have about $194,000 in cash, $23,000 in FI3. We plan to build out a BRI portfolio following the financial issue strategy. Given the recent alerts on the economy, I'm not exactly sure how to proceed. I'd like to at least have the cash earning interest in the brokerage account. We won't need the money for about 3 years or longer. Any suggestions for Kevin, Shana? He does really appreciate the ministry as well.
Yeah, absolutely, Kevin. So there are a few things that are currently on the buy list in the preferred sector and in the fixed income sector. So you could work on getting those pieces of your portfolio filled out right now. For the rest of it, until we start to put more things in the different sectors that you still need onto the buy list, then your cash position should be paying, 4.5% to 5%. You can, I'm not sure which platform that you use, but you can usually go in and click on the symbol for your money market, and it'll pull up what the yield is. So that's where you can check to see, 4.5%, 5% is not a bad place to be short term until we feel comfortable enough to put some things back on to the buy list. If it's not paying anything, then, I would maybe contact customer support and just ask them which other type of core account that you could use that would generate more interest for your cash. Just, be careful, be cautioned whenever you do call into support. A lot of times the companies will take that as an opportunity to convince you that you need to work with one of their advisors to build your portfolio for a fee, and although we do recommend that you set up your portfolio on a discount brokerage, we are not recommending the advisors that they offer because more times than not, I would be willing to bet that they know nothing about biblically responsible investing, and they know nothing about the strategy that you're trying to use. And I would hate for them to talk you out of your conviction to be biblically responsible.
Yeah.
So.
You know, Shana, we got a good comment earlier this week from James in South Carolina. He was saying the commentary that you put out last week, very helpful. Sometimes I need a little hand-holding, Shana. I'm with James there. I think I could use a little hand-holding every now and then too. But yes, it was very helpful.
Yeah, it is. And I mean, it's, I've been in the business for, well over 20 years now.
Yeah.
I guess coming up on 25 years. And, when the markets get a little wonky, it's hard not to be, not to become anxious. But so many times in the scripture, it says, do not be anxious about anything. And, if we're tempted to be anxious, the best thing that we should do is the first hand that we should hold is the Lord's, and then go check out the partner commentary and see what we have to say about it. Well, folks, if you are listening on an outlet that only carries the short version of the show, we have to bid you a farewell today, but we have more to come, so don't go away. If you want to catch all the full versions, get our phone app or go to financialissues.org. Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Every time I turn on the news, I get so frustrated. When I read a headline, it's obvious they're just trying to manipulate me for clicks and views. I just want to stay informed about what's going on without all the drama and opinions. I knew I needed to find an alternative, and thankfully I found FISM News. They keep the viewers up to date with all the latest news without the extra noise. Check them out by going to fismnews.tv. That's fismnews.tv.
Today, it's easy to get caught up in the rush and forget about what really matters. But when it comes to your money, are you making decisions that truly reflect your values? Too often, we invest in stocks without knowing what they stand for. What if your money could speak for what you believe in? Imagine following an investment strategy that recommends companies that don't support the things that break the heart of the Lord. A steadfast strategy, never wavering from biblical truth. When your investments align with your values, your money speaks for you. Let your money do the talking. Invest in what matters to you. Because biblical values matter, even when investing. Visit financialissues.org to learn more. That's financialissues.org.
Initially, when we became members, I thought, what if this doesn't work? I mean, we're going to give up this whole concept of insurance, and we're going to trust God and His people. And I was like, yeah, well, of course. I'm going to trust an insurance company to come through for me, or I'm going to trust the church to come through for me. And that's a no-brainer. I love getting the monthly share that I give to each month that has the name of a real person and their real medical concerns and a prayer request, for them. If I have a need, I know I can go get care. I can see the providers I want to see. I don't have to worry if they're in my network. And if we need medical care, Samaritan is there.
A community of Christians paying one another's medical bills. For more information, go to financialissues.org and click the Samaritan Ministries banner.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Well, good morning, everybody. Good to be here with you all today. Thanks for hanging with us here. Hope you enjoyed those segments there with Shana. Of course, I'll be taking you the rest of the way here. 610-363-1110. If you want to join the conversation, I'd love to chat with you if you would like. 610-363-1110. Hey, make sure to check out Shana's commentary as well. If you just need a refresher on what we're doing right now, in particular with our strategy right now. Again, as Shana mentioned, this is kind of more of a temporary strategic move as we're just trying to make sure that we're being cautious with the money that we have. So I'm not talking about us as a ministry, but us encouraging you all with the investment dollars that are yours, really God's, but yours to steward. So check out that commentary if you have any questions about it. Make sure to put those questions in on the chat. Or again, you can call in 610-363-1110. Let's take a look at what the markets did yesterday. So after last week's chaos, apparently the markets were a little chaotic while I was at the shore. They roared back yesterday. Big day. Some encouraging PPI data helped for sure. By mid-afternoon, all three major indices were comfortably in positive territory. The NASDAQ was up over 2 full percentage points, which is the place that it stayed at the end. So by the bell, all three indices up over 1%. The Dow right around 1 full percent. The S&P 500 was up about 1 3/4, and the NASDAQ up almost 2.5%. So a good day for the markets yesterday. The pre-markets this morning were somewhat muted as they open right now. Everything opening relatively positively. So the Dow Jones is up just above the flat line. Same with the S&P 500. The NASDAQ is up about 0.1%. So we'll see what happens there as we continue on here. Oil is currently trading around $78.50 a barrel. And the U.S. 10-year Treasury yields down below that 4% threshold. I think they went below it a couple weeks ago, down around 3.84%. So in the economy this week, today, the big number actually already came out. It was the inflation and core inflation number, that CPI number. That number actually rose. No, excuse me, it did not rise. I'm sorry. Nope, let me backtrack one more time. It did rise as expected in July, rose about 0.2% for the month, following a 0.1% decline in the previous month, putting the 12-month inflation rate at 2.9%. My little snafu there, I used to tell people all the time, if ever I made a mistake like that, I would say, easy for me to say. Yeah, that's right. So it did rise slightly, 0.2%. The economists surveyed by the Dow Jones had been looking for respective readings of right around there, and they certainly hit the mark for sure. Excluding food and energy, core CPI came in at 0.2%. Monthly increase, 3.2% annual rate. So hit expectations there. I think the markets seem to like that. We'll see what they do for the rest of the day. We do have some earnings reports to get to later today, which we'll talk about. But later on this week, as you heard Shana mention, we'll get retail sales. We'll also get building permits. We'll get the Michigan consumer sentiment. Speaking of earnings, I did want to mention, I believe it was yesterday, if I'm not mistaken, we got Home Depot earnings. And keep in mind, folks, as we talk about this, and Shana mentioned this on yesterday's show, we're going to reference companies reporting their earnings reports who may not be biblically responsible. It's not a recommendation to buy these companies. But again, like we look at the markets every day, these companies give an indication on how the consumer tends to be doing. And so Home Depot is one of those. Home Depot beat sales and earnings expectations in the second quarter, but said it anticipates a comparable decline in sales this year. So the home improvement retailer's CFO said many homeowners are actually putting off projects due to a sense of greater uncertainty in the economy. I think that makes a lot of sense, and I've actually had some experience with that as well. I would love to do a bunch of different projects around my house, but You need to make sure to have the money for them first. You also need to make sure that even if you have the money for them, that you're not pulling so much out of savings that you don't put yourself in a tough situation if something comes along where you have to make an emergency payment, for example. So sales for Home Depot for the quarter were right around $43.2 billion. That's up about 0.6% from last year, quarter two. Comparable sales for the second quarter of fiscal year 2024 decreased 3.3%. For this week, you heard Shana mention Walmart is going to report later this week. That's really the big earnings call that we have. You can take a look at Monday's commentary. Shana mentioned it yesterday a little bit. Again, it's a good indicator for consumer health. It's not a recommendation to buy the company. Walmart's not biblically responsible. We'll also get Alibaba and John Deere as well. Not much of note on Friday. So that's what we're looking like for earnings this week. Certainly slowing down is earnings, as we're right smack in the middle now of quarter three. A couple of headlines to get to here, folks, before the ag report. The first one is this. Record-breaking backlog is leading to $1.1 billion in improper Social Security payments. Very interesting stuff here. So led to, once again, roughly $1.1 billion in projected improper payments to beneficiaries in the Social Security office. Now, this is according to a new report from the Social Security Administration Office of the Inspector General. According to this report, the agency's backlog of pending actions soared to a record high of 5.2 million as of February. The averaging processing time for improper payment cases, this is where beneficiaries were either underpaid or overpaid, was 698 days. So that's about almost 2 years. Pretty crazy stuff. That's just according to a sample evaluated by the Social Security Administration. So we're seeing something troubling there with this, of course, folks. Another rather troubling headline, I think, for us. $84 billion worth of Biden-subsidized manufacturing projects are floundering. This is unfortunate. $80 billion worth of projects from the Biden-Harris administration's ambitious climate and industrial initiative have been either paused or delayed. Now, this is all according to the Financial Times investigative report that was released earlier this week. About 40% of the nearly $228 billion in manufacturing projects subsidized by the Inflation Reduction Act. Remember, we talked about this Inflation Reduction Act much over the last year or so, as well as the CHIPS and Science Act, have been postponed or paused. Now, the setbacks cast doubt on the administration's ability to establish a sustainable supply chain for the production of green energy in the U.S., given the challenges faced by domestic manufacturers due to declining EV demand, inflation, high interest rates, and competition from China. I think Shana mentioned this on the show yesterday, folks, but this is not surprising, and this is not in any way meant to bash anyone who is in office right now. But when you have career politicians making financial decisions, what more can you expect than mismanagement of government funds? These are career politicians. These people don't know how to do anything else except generate votes from a voting constituency. That's part of why there's the stereotype that politicians lie. Well, the reason they do is because they don't really know how to do anything else except get votes. So they have to make empty promises. They make the promises, they stay in office so they can keep their jobs, and then they have to figure out a way to continue to keep their job. I'm not saying all of them do. Some of them certainly are honest, and we thank God for those honest ones, but let's be honest, there aren't many. There just aren't many. And so I think we're seeing that here, specifically with all of what has really been nonsense financially from the Biden-Harris administration. And I think it's really, really silly when we see now Vice President Kamala Harris's campaigns. She's claiming to be able to fix all this stuff that she could already try to start to fix because she's already the vice president, don't you see? Very interesting stuff here, folks, that we have here. We've got to be reminded that our country is not done yet. God's hand is still with us and on us, and our country is worth fighting for. That's why this upcoming election, folks, is so very important. Coming up next here, we have the Ag Report with Craig Haugaard. Craig seems to be doing very well, and he's got an ag for us today. And then after that, we'll be back with more financial issues, as well as your calls, 610-363-1110. We'll be back.
This is Craig Haugaard with your Financial Issues Egg update for August 14th. Well, the corn market gave back some of Monday's gains as this prospect of a large U.S. crop and robust stocks continue to weigh on prices. Corn conditions were unchanged from last week at 67% good to excellent. Silking is 94% complete, and 60% of the corn crop is now in a dough stage with 18% of the crop dented. At the close, December corn was 4.5 cents lower at $3.97 1/4. Soybeans closed lower due to limited demand, growing U.S. stocks, and strong production estimates. Now, historically, November beans have moved much lower when we've had a carry-out-to-use ratio similar to what the USDA gave us on Monday, and we're probably going to see that play out over the coming days and weeks. Yesterday found the November beans 23.5 cents lower at $9.62 1/2. Wheat is having a hard time finding a supportive story, and as a result, has chopped around sideways to lower. U.S. wheat weakness continues to chip away at the premium to Black Sea values, but it hasn't been enough yet to pick up any significant export business, as yesterday saw Egypt buy 30 cargoes of Russian wheat. At the close, Minneapolis September wheat was 0.75% higher at $5.93. Kansas City dropped by half a cent to close at $5.47 3/4, and Chicago was down 8 cents at $5.28 3/4. Cotton futures gave up everything that they had gained in the previous session, plus a bit more. At the closing bell, we had December futures 108 points lower as they settle at 67.99. Livestock futures had a mixed story. We had October live cattle 72.5 cents higher, $180.75 per hundredweight. October feeder cattle were $2.20 higher, so they settled at $239.92.5 per hundred. While October lean hog futures dropped by $1.47.5, closing out the session at $75.80 per hundredweight. Class 3 milk futures seem like they want to run back up and test the old contract highs. Yesterday had September futures up 21 points as they closed out at 21.34. This has been Craig Haugaard with your Financial Issues Egg update. We'll be right back with more financial issues after this.
When it comes to money, I always have so many questions. I never know where to go to get answers to those questions. They never really teach you this stuff in school, like some of the best ways to handle it, how to save, when to invest, where to invest, even just what to do with the money. And if I put it in the stock market, what's the best way to protect from losing it all? That fear can be paralyzing. You don't really know what decisions to make. As a Christian, I don't want to give my money to people who are going to use it for things that God hates. When I discovered Financial Issues, it was like a burden was lifted off my shoulders. Not only did I gain access to a simple investment strategy that I can manage myself, I also have the peace of mind that my money will not be going to companies that actively promote things that God hates. Financial Issues has allowed me to experience peace in my investments.
Invest your money in a God-honoring way. Go to financialissues.org.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Well, thanks for sticking with us on Financial Issues today, folks. Great to see so many of you. So many hellos on Facebook. Karen, Jean, Leaf. Good morning to you all. Great to see you. Alejandro on Facebook, I see you there. Claude with a great comment here. We were just talking about, the folly behind how the Kamala Harris campaign is a promise to fix all these things that her administration could have fixed for the last 3.5 years, and they haven't. Claude says Biden and Mint broke it, so now we should vote for them so they fix it. Do they think we're that dumb? Sadly, Claude, honestly, I think there are a lot of people who will be fooled again. I think there are a lot of foolish people out there who do think, yeah, of course, Kamala's going to be great. This is why we need to be grounded in the truth and in reality and in common sense, folks. We need some common sense. Just a dash of common sense in this country would do us very well. So good stuff. Good to see you all there on the chat. Speaking of chat, Grant, let's get to some comments and questions here. I know we have a couple to get to today. Let's start with Bob.
Yeah, so we have a question from Bob, and kind of like some personal things from Bob, too. I'm a CM/engineer on large rail projects, but now on seasonal layoff pending work to start. Many friends advised me to just retire, me praying for the Lord's direction, and end July team. The board of directors with ESOP members announced a shakeup. The CEO, several SVPs let go. More to be revealed. Over past years, the company embraced DEI, CRT, alphabet culture. I like the alphabet culture.
Yeah, that's good.
Seems a reason not to continue employ here. What say you?
That's a good question, Bob. I appreciate you asking. And that is a tough one. Let me say this. I don't think I can give you a hard and fast, clear answer because this is not a question of what is morally right versus morally wrong. If this was a question of you entering into sin, for example, I could tell you clearly, yeah, don't do that, do the other thing. But you could go right or wrong either way here. And so I'll do my best. Now, understand, you're 72 years old. You've got more experience than I do. I'm a kid. But let me try to help you here as best I can with the wisdom that God has given me humbly and give you some things to consider. So here's the first thing to consider. Before any of the other things you mentioned, Bob, I would ask if you feel like you're in a situation right now, and I'm not saying like, oh, your feelings. I'm talking about using the wisdom you have. If you believe that you're in the situation where you are able to retire right now, ask yourself that question first. Can I retire right now? If the answer is yes, that's going to pretty heavily influence, I think, your decision for sure. If it's no, I think that will heavily influence it as well. The answer to that question is going to carry a lot of weight in determining your next course of action. And Bob, I love what you said. You're praying for the Lord's direction. That is the right move. That is absolutely the right move. Neither option within a vacuum, as I said, neither option is morally wrong. It's not a sin to continue working at a place that is not, not doing something that is, openly against God's will. It seems like here you work for a large rail project. That's a very good thing that helps the economy. In the same way, retirement in of itself is not necessarily sinful. So what you need to do is seek the Lord's will absolutely in understanding which of these would be right. We'll get to that in just a moment here. But to your current situation as it pertains to the culture at the rail company. Now, this is a big one here. You mentioned there's been a lot of shakeup. The CEO's gone. Several big members are gone. That can be a warning sign. When there's smoke, there's fire. If there's a big shakeup and then to top it all off, you've got the DEI stuff, the alphabet culture, the CRT stuff. You're moving in that direction. It seems like the company is not moving in a healthy direction. And I can only imagine, brother, I'm sorry that you're in this situation. I can only imagine how much of a headache that must be for you to work for a company that has embraced all this nonsense. You know the truth. Never mind the fact that you're a Christian who rightly does not support this stuff. But the simple fact that you have common sense and you understand none of these things are going to help our company. None of these things are going to help us lay down rails well so we can help the American economy and infrastructure. None of these things will help. They're only going to be distractions. I can understand how frustrating that must be. And by the way, I speak as someone with no experience in that area because I work for a company that is absolutely delightful and wonderful to work for and loves the Lord and doesn't get involved in any of the nonsense. That said, I wouldn't hold it against you one bit if you decided, you know what, I'm done. I'm done with this. Be gracious about it, but you go to your employers and you say, you know what, guys, I don't like the direction that this company's going in. I need to leave. And I would not hold that against you at all. Of course, I'd urge you to do it firmly, honestly, lovingly, definitely. But if that's what you really feel like you need to do, I think that could be a great thing to do. There are serious frustrations here that you've mentioned in working in an environment like this that is not healthy and it's not a good direction for a company, as we've seen over and over again. So I've seen companies like John Deere reverse course. They realized what they were doing wrong. And I would only hope that your company would do this as well. That said, Bob, the last thing I'll say is to consider this also. This company is clearly in a place where Christians could make a huge impact. And I think you might agree with me there. The light of the gospel's been shut out. You could also make the legitimate argument that remaining with this company could be your mission field. Now, I'm not saying that it is. For some people, their mission field's overseas. For others, it's their children. For some, it's the inner city here in the States. For you, it might be your workplace. It might be a place that has been bombarded and overpowered with the sexual revolution and the demonic agendas that come with it. And so please don't hear me say that. I'm not trying to say, oh, I have godlike level and I know exactly this is what you need to do. I'm not saying that. I'm just telling you to consider that. That could be something that you might need to consider as well. Don't necessarily write off or cut ties with a company that you've built up a network of relationships. You know, you have people there probably who trust you, simply because the company's making terrible choices. That's fertile ground for the gospel, brother. So you might consider, you know what? I might leave this company. I might also stay. This may be where the Lord has called me to be a light in a dark place. This may be my mission field. Ultimately, brother, here's what you have to do, exactly what you said. You got to pray through it, and ultimately you need to make a decision. And I would land on, if you choose to leave graciously and search for another opportunity where you can bring the light of Christ. And maybe that's within retirement. Maybe it's time to pour into your family, grandkids, children. If you choose to stay, make that workplace your mission field. No matter what you do, brother, seek the Lord for wisdom. He's going to give it to you. And then make a decision. Make a decision. And you know what? I trust that if you've sought the Lord and you make that decision, you can't go wrong either way. It's just a matter of now, what are you going to do in that situation to honor the Lord and be a blessing to the people around you? I hope that helps you there, brother. That's a great question. What do we have left here, Grant? What's our next one?
All right, we have a question from Shana, who's 36. What is the best way to save for children's college? We have 2 children under the age of 4. I've looked at ESA and a 529 PA plan. What are there any other options, and what would you recommend?
Good question, Chanel. Let me point you to the show we broadcasted on July 16th of this year. So July 16th, 2024, Shana went into a deep dive on education planning. And I think that would be a great resource for you to start at. July 16th, again, is the date, July 16th. It includes some of the plans that you mentioned there. I would start there. So there's a couple ways you can find the show. One, go to the FISM app. If you open up the app, click Financial Issues, click Watch on Demand, and then scroll down to that day's episode. You might need to go to the next page. Just go to the next page. Scroll down, and you'll find the show from July 16th. It's titled DEI Policy Dangers. DEI Policy Dangers. Go about halfway through that episode. It's in the back half of that show, about 30 minutes in. That's when we start talking about that particular topic there of saving for children's education. You can also find the show on financialissues.org. If you just go to the radio program, and actually, let me just find that here really quick here. So go to the show, that tab there, radio program, click on radio program, and then just scroll down to that day's episode. Again, it'll be July 16th, about halfway through. You'll find everything that you need there. If you want a quick answer right now, though, let me give you just some words of wisdom based on what Shana had said. Unfortunately, 529 plans are not biblically responsible for the most part. They're run by mutual fund companies that are mostly not BRI. We would advise you use another method. Try to avoid the 529 plan if your heart has been pierced with needing to be biblically responsible, which we hope that it is. The ESA plan, that's also called a Coverdell, by the way, could be a good option for you. The ESA has a similar setup to a 529. Some of the options are biblically responsible. There are some income limitations. It's based on how much money you make, so you just have to consider that there. It might be worth it for you to consider having someone else, maybe if you have parents who are still alive and they don't make as much income as you do, maybe having them pay for it or sponsor it could just be something that you could do. And the assets, just like in the 529, the assets have to be used for higher education or distributed to a person using it, and there's time limits with that as well. So there are just some limitations to it that you have to consider. I would say your best option, and Shana would agree with this as well, probably would be a regular investment account. Just open up a regular investment account, invest with us, use the BRI model. There's no need to worry about BRI, by the way, because you can invest in whatever you want to. So it's it's yours to be able to decide what to do. There aren't too many rules to follow with the distribution requirements. You have to understand tax laws and that sort of thing. But also a nice benefit to that is if you don't use it for education purposes, you can still get the money. You don't lose that money. You know, so with the ESA and the 529, those are set up specifically for education. If you say you have a son who, you know, maybe is thinking about going to college but then decides he doesn't want to, you don't lose that money. You can still bless him in another way. You can help him with a down payment on a house, for example. You can help him pay for his wedding, something like that. So that's what I would consider for you there, Chanel. And the last thing to consider as well also, you know, a college education isn't always what it used to be. Some kids want to do it, some kids don't. I saw a stat recently that some 50% of college grads are working in jobs that don't require a college degree. In fact, I know a buddy of mine entered the workforce at 18. I think he's 23, 24 now. Makes great money. He works for a cabinetry company, and he makes really good money. Never went to college, doesn't have debt, has a house now, doing really great. It's good questions for you to ask with your children to help them see maybe they want to go to college, maybe they don't, and that would help you consider how to plan for them as well. Good question there, Chanel. Great to be here with you all this morning. As always, Lord willing, we'll do it again tomorrow. Until then, remember, it's all His. Let's be found good and faithful stewards with the money God has given to us. God bless you all. We'll see you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.